Picture this for a moment, tapping into the explosive world of crypto, watching your investments grow as this new digital frontier evolves, all without ever actually buying a single coin. Sounds a bit like financial magic, doesn't it? But in 2025, it's very real. The crypto space has matured beyond just Bitcoin and Ethereum purchases. There are clever, lesser-known ways to ride the crypto wave without the stress of holding wallets or safeguarding private keys. In this video, I'm breaking down 5 smart strategies to invest in the crypto boom without ever buying coins directly. And while you're here, do me a quick favor. Hit that subscribe button so you never miss out on these powerful money moves. And drop a comment telling me how you feel about crypto right now. Excited? Nervous? Totally on the fence? I'd love to hear it. By the end of this video, you'll have fresh ideas to tap into this massive opportunity, even if you never touch an exchange. 5. Crypto stocks. Riding the blockchain boom from the comfort of Wall Street. Picture this. You're at your usual brokerage app, scrolling through familiar tickers, Apple, Microsoft, Tesla. But just beneath the surface, there's a stealthy way to tap into the cryptocurrency revolution without ever downloading a digital wallet or memorizing a complicated C phrase. Buying crypto-related stocks lets you benefit from the rise of blockchain while staying in the regulated, well-lit streets of the traditional stock market. Take Coinbase, for instance. Every time someone buys Bitcoin, sells Ethereum, or panic swaps Dogecoin for Tether, Coinbase collects a fee. They profit from crypto volatility, whether the market is booming or busting. As trading volumes soar, so does Coinbase's revenue, pulling their stock price along with it. Then there's MicroStrategy, the software giant turned Bitcoin mega holder. Their CEO practically made headlines daily by turning the company's balance sheet into a Bitcoin treasure chest. When Bitcoin spikes, MicroStrategy's share price often jumps faster than Bitcoin itself, giving you leveraged exposure without ever touching a blockchain. Or look at hardware heroes like NVIDIA and AMD, whose powerful GPUs are essential for crypto mining. As mining operations expand to chase fresh coins, demand for these chips grows. Even if Bitcoin crashes, NVIDIA is still selling to AI developers, gamers, and data centers, giving you broader safety. Investing in these stocks feels familiar. You click buy. They sit in your brokerage account, insured and regulated. You still enjoy the blockchain boom, all with the convenience and confidence of old-school investing. 4. Blockchain ETFs. Spreading your bet across the whole industry. Maybe picking individual stocks feels like betting on horses. If so, blockchain ETFs, exchange-traded funds, let you buy the entire racetrack. They bundle dozens of companies tied to crypto and blockchain into a single diversified investment you can trade like any other stock. Imagine holding tiny pieces of Coinbase, NVIDIA, PayPal, Square, IBM, and even smaller up-and-coming blockchain tech companies, all with one purchase. ETFs spread your risk. If one company stumbles, others pick up the slack. Take the Amplify Transformational Data Sharing ETF BOK. It carefully curates a basket of stocks that thrive on blockchain's growth, from miners to payment processors to supply chain innovators, using distributed ledgers to track goods globally. Or consider Bitwise Crypto Industry Innovators ETF BITQ, which zooms in on pure crypto exposure, packed with companies whose fates rise and fall on blockchain's shoulders. The best part? You can buy or sell ETFs instantly. They live inside your standard brokerage, require no digital wallet, and come with built-in legal protections. Plus, many ETFs pay dividends, giving you small cash flows even as you ride crypto's long-term trajectory. So instead of staking your hopes on a single winner, you own a broad slice of the entire ecosystem, a calmer way to bet on blockchain's future. 3. Mining and infrastructure companies, investing in the picks and shovels. During California's gold rush, it wasn't always the miners who struck it rich. Often, it was the people selling picks, shovels, and rugged denim jeans. The same principle is alive today in the crypto rush. You can invest in crypto mining and infrastructure companies, the backbone of blockchain, who profit simply by keeping the digital world running. Take Riot Platforms or Marathon Digital Holdings, which run massive mining farms. Picture enormous warehouses humming with thousands of high-powered computers, working non-stop to validate transactions and earn Bitcoin rewards. As long as there's a blockchain to secure, these miners are essential, earning digital gold by providing their computing muscle. Or look at companies like Canon Incorporated, which manufactures the specialized ASIC miners that make Bitcoin possible. Even if you never own a single Satoshi, you can benefit every time a new miner buys their equipment. Then there are broader infrastructure players, data center operators expanding capacity for decentralized apps, logistics firms using blockchain to track food from farm to fork, payment giants like PayPal and Square who enable merchants to accept crypto. By investing in these picks and shovels, you're betting on the industry's growth without tying yourself to the wild swings of coin prices. Whether Bitcoin is $70,000 or $20,000, these companies have real revenues and business models that sustain beyond hype. It's arguably the smartest angle. You're playing the casino owner, not the gambler at the roulette wheel. 2. DeFi lending and yield platforms, earning income on the blockchain without owning coins. Here's where it gets more futuristic. What if you could earn from the crypto economy without ever buying coins that might crash tomorrow? Welcome to DeFi, decentralized finance. Platforms like Aave, Compound, and Yearn Finance let you participate in a digital banking system, entirely without banks. Here's how it works. You deposit stablecoins like USDC or DAI, which are pegged 1-to-1 to the dollar, into a smart contract on the blockchain. Borrowers pay to use your capital, and you earn interest. Because you're using stablecoins, you skip the roller coaster swings of Bitcoin or Ethereum, yet still collect yields far beyond what traditional banks offer. Think about it. Your local bank might pay 0.5% interest on your savings. Meanwhile, these DeFi platforms often pay 3-8%, sometimes more, depending on market demand. And it's all programmatic, no human banker needed. Then there are yield aggregators like Yearn that automatically shuffle your funds between different lending pools to chase the best returns, like a robo-advisor for DeFi. It maximizes profits behind the scenes, saving you from daily micromanagement. Yes, it's technically still using crypto rails, but many investors see it as owning a high-interest account, capitalizing on blockchain's money mechanics without speculating on coin prices. It's a way to extract steady income from crypto's infrastructure, even while sidestepping the volatile coins themselves. 1. Startup equity, owning pieces of the next big blockchain disruptor. And finally, at the very top of this list is arguably the most thrilling and potentially the most life-changing way to invest in crypto without ever buying coins: backing blockchain startups directly. Imagine you were among the first to spot a tiny startup called Ethereum, or OpenSea before NFTs became a household acronym. Early investors in these projects didn't just buy tokens, they owned equity. And as these platforms exploded, so did their investments. Today, with the rise of equity crowdfunding platforms like Republic, Seed Invest, and even special tokenized investment vehicles, regular people can buy small slices of the companies building the crypto future. That might be a DeFi platform rewriting insurance, a game studio creating the next blockchain-powered metaverse, or a logistics firm using decentralized ledgers to eliminate fraud. Some platforms even fractionalize startup equity, letting you invest as little as $100, lowering the barrier so almost anyone can place smart, diversified bets across multiple blockchain innovators. For many savvy investors, this is the ultimate off-coin play. You skip the daily price drama, yet if the startup succeeds, your equity can multiply many times over, all without ever logging into a crypto exchange. These 5 approaches prove there's an entire universe of ways to tap into blockchain's explosive growth without ever buying a single Bitcoin or Ethereum token directly. Whether you prefer the solid familiarity of stock markets, the diversified cushion of ETFs, the industrial backbone of mining firms, the futuristic yields of DeFi, or owning equity in tomorrow's disruptors, each method lets you stake your claim in the crypto revolution in a style that matches your comfort level. So which of these crypto investing strategies feels like the perfect fit for you? Share your thoughts in the comments. I'd love to know how you're planning to step into this exciting world without the usual headaches. If this video gave you a fresh perspective or sparked new ideas, give it a big thumbs up, hit that subscribe button, and tap the bell so you're always first to catch more smart ways to build your wealth and future. Thanks so much for hanging out with me today. Now go explore these opportunities and start making your money work for you in ways you might never have imagined. I'll see you in the next one.